Welcome back to JRNY TV, where we make the complex world of digital finance not so complex, regardless of your experience. Today we are diving straight into an urgent investment opportunity, getting ahead of the institutional investors and buying the cryptos that they're quietly eyeing before Wall Street moves in full force. The biggest of the financial players like BlackRock, Fidelity, JP Morgan, and countless hedge funds are meticulously positioning their billion-dollar portfolios for crypto's next explosive run. But here's the catch. By the time their massive moves become obvious to retail investors, prices will have already soared, and the best opportunities could vanish overnight. But what if you could position yourself strategically today before institutional investors flood these undervalued cryptocurrencies with billions of dollars? That's exactly what we're breaking down in this special JRNY TV episode. We'll take you behind the scenes, revealing the altcoins and narratives Wall Street institutions and influential financial powerhouses are quietly eyeing. Emerging blockchain technologies such as Layer 2 solutions, tokenized real-world assets known as RWAs, and don't forget those sectors like artificial intelligence. These specific themes aren't just random market buzzwords. They are the strategic sectors institutions are actively building positions in right now. By the end of this video, you'll have a clear roadmap of the exact cryptos, ranging from well-known platforms like Ethereum, XRP, and even Solana, to undervalued assets with huge upsides like Aptos and ADA, known as Cardano. So grab your notes and buckle up. Your journey to beating Wall Street at its own game starts right here, right now on JRNY TV. The big question you're probably asking yourself is, why exactly are institutional heavyweights like BlackRock, JP Morgan, and Fidelity, just to name a few, so bullish on crypto as we head deeper into 2025? Well, the answer lies in crypto's rapidly changing landscape. For years, institutions stayed cautiously on the sidelines, hesitant due to unclear regulation, custodial challenges, and volatile market cycles. However, today, clearer global regulations and the launch of Bitcoin and Ethereum ETFs globally have drastically shifted this narrative, providing a structured, regulated gateway for institutional billions to flow directly into crypto market. Another crucial factor that is driving this institutional interest is the shift in how institutions view crypto's role in global finance. It's changed. Digital assets are no longer merely speculative plays. They're becoming essential components of diversified portfolios. With traditional markets facing prolonged economic uncertainty, inflation, and reduced growth potential, institutions everywhere are turning to crypto assets, especially top-tier projects, as viable hedges and high-growth opportunities. This evolving perspective transforms crypto from a niche investment to a critical component of institutional financial strategies. Furthermore, institutions are closely and obsessively tracking the emergence of crypto narratives like tokenization of real-world assets, known as RWAs, AI-driven blockchains, and scalable Layer 2 solutions, sectors that they believe could dominate crypto's next major bull cycle. The growing interest in Bitcoin and Ethereum ETFs, it serves as the initial catalyst, creating a clear path for institutions everywhere to gain more exposure. But that's just the beginning. As Wall Street's confidence continues to inevitably grow, expect their massive capital to expand outward into high-potential altcoins aligned with these powerful narratives. Here at JRNY TV, we firmly believe institutions are currently positioning themselves early, and retail investors, they should do the exact same before Wall Street fully deploys its enormous financial firepower into crypto. Right now, something groundbreaking is quietly happening beneath the crypto markets, something capable of bringing trillions of dollars of fresh capital directly from Wall Street to cryptocurrencies. We are talking, of course, about the rapid rise of Bitcoin and Ethereum ETFs. These regulated institutional-grade investment vehicles, they represent an absolute game changer, allowing traditional investors from pension funds to hedge funds to seamlessly integrate crypto into their portfolios without ever holding actual tokens. Institutions love simplicity, security, and regulatory clarity, and ETFs, they provide exactly that. The launch and approval of ETFs from giants like BlackRock, Fidelity, ARK Investment, and VanEck, just to name a few, all signal a seismic shift in crypto's legitimacy. Institutional investors, they no longer see Bitcoin or Ethereum as volatile digital currencies. They see them as strategic assets with long-term growth potential. Bitcoin ETFs have already drawn billions with a B in institutional capital, dramatically reducing market volatility and establishing Bitcoin as digital gold. Ethereum's ETFs are quietly following suit, offering exposure to crypto's leading smart contract platform and its rapidly growing ecosystem. Institutions clearly anticipate enormous growth, and that's why they're positioning early to reap maximum benefits. But here's the kicker. Bitcoin and Ethereum ETFs, they're not the end game. They're just the beginning. With Wall Street's capital firmly entrenched in these foundational assets, the floodgates open wider for additional crypto ETFs every single day, targeting high potential altcoins like Solana, XRP, ADA, and many more. This influx of institutional liquidity will inevitably cascade right down, significantly boosting valuations across multiple crypto sectors. Here at JRNY TV, we see ETF adoption as one of crypto's most bullish narratives for 2025, creating an explosive growth environment for investors savvy enough to front-run institutional moves. Are you savvy enough? The ETFs might start with Bitcoin and Ethereum, but the next chapter, that is altcoins. And investors who prepare now, they stand to gain immensely. As institutional investors load up their crypto war chests in 2025, they're not randomly buying tokens. They're targeting specific narratives they believe will reshape the future of finance and technology as we know it. One massive trend institutions have clearly set their sights on is artificial intelligence, AI. And AI-focused crypto projects are gaining major traction, promising to merge blockchain's transparency with artificial intelligence power to transform industries, from financial trading to predictive analytics as well as automation. Wall Street knows AI-driven projects could in fact reshape entire sectors, and crypto provides the perfect platform to fuel innovation and massive growth. Another key narrative institutions have firmly embraced is real-world asset tokenization. Look that up if you're not familiar with it, which merges traditional finance with blockchain technology. Tokenization assets like real estate, commodities, and bonds unlocks trillions of dollars in liquidity, efficiency, as well as accessibility. Institutions including BlackRock and JP Morgan are actively exploring crypto projects that are specialized in RWAs, betting these assets will experience tremendous demand over the coming years. As regulatory frameworks around asset tokenizations solidify globally, institutions everywhere recognize the enormous investment potential and efficiency gains that RWAs provide. This narrative is not just hype. It's a financial revolution institutions are already quietly funding. Finally, institutions have firmly set their sights on Ethereum's rapidly expanding layer 2 ecosystems. Projects like Arbitrum, Optimism, and ZK Sync solve Ethereum's most pressing issue, scalability, by dramatically improving transaction speeds and slashing those costs. Institutions realize Ethereum's layer 2s could become the backbone of the next generation of financial services, decentralized applications known as dApps, and digital economies. On-chain analytics already reveal substantial institutional capital flowing into layer 2 protocols, indicating that institutions, they anticipate massive future growth. Here at JRNY TV, we strongly recommend that retail investors pay close attention to these strategic narratives. Wall Street is placing their bets now, and aligning yourself early with these institutional moves could in fact be the smartest decision that you will ever make. Next up on the list is Cardano, or ADA, a blockchain platform that continues to quietly attract institutional attention despite flying under the radar, often dismissed by impatient traders due to its slower methodical development process. Cardano has meticulously built one of crypto's most secure and academically rigorous ecosystems. Institutions, however, see far beyond short-term noise. They're attracted by Cardano's meticulous, research-driven approach, robust governance model, and recent rapid expansion into decentralized finance, known as DeFi, tokenized real-world assets, known as RWAs, as well as enterprise blockchain solutions. Why exactly are institutions eyeing Cardano in 2025? It's simple. Cardano's meticulous, peer-reviewed approach is finally paying off. ADA's network has significantly upgraded its scalability and functionality through major improvements like the Hydra scaling protocol, enabling faster, cheaper transactions that are ideal for institutional-grade financial products and services. Cardano's strategic expansions into markets across Africa as well as Asia have already begun to bear fruit, providing financial inclusion and practical blockchain solutions at scale. Institutions, they see ADA as the perfect combination of strong fundamentals, regulatory clarity, and future-proof innovation, exactly the type of crypto they prefer for long-term strategic investment. On-chain metrics reveal institutional conviction around Cardano is steadily growing. Whale activity, specifically among wallets holding over 1 million ADA tokens, have surged significantly in 2025. Hedge funds, asset managers, and financial institutions everywhere are discreetly building positions in ADA, betting heavily on Cardano's long-term potential. And here at JRNY TV, we see Cardano as an overlooked gem that institutions are quietly accumulating before mainstream markets catch wind of its true potential. And realistically, Cardano could see explosive growth, potentially reclaiming and surpassing its all-time previous high, reaching price targets anywhere between $5 to even upwards of $10 by 2025. Make no mistake, Wall Street is quietly bullish on ADA, and retail investors, they would be wise to follow their lead. Now, let's talk about Litecoin. Despite being one of crypto's earliest pioneers, Litecoin tends to get overlooked by retail investors who chase flashier, short-term gains elsewhere. However, institutions have quietly recognized Litecoin's resilience, stability, and proven track record as a reliable and efficient blockchain for payments. As financial institutions seek exposure beyond Bitcoin and Ethereum, Litecoin is in fact emerging as a strong secondary choice due to its long-established reputation, regulatory clarity, and reliable infrastructure. You may be asking, why exactly are institutions quietly loading up on Litecoin? Well, firstly, Litecoin boasts a robust, battle-tested blockchain with consistently low fees, fast transaction speeds, and exceptional reliability. Exactly the characteristics that institutions value when diversifying into crypto assets. Additionally, Litecoin's successful halving cycles, including the recent one in 2023, highlight its predictable and deflationary tokenomics, aligning perfectly with institutional preferences for long-term sustainable growth. Wall Street clearly views Litecoin as a trusted hedge and valuable diversification tool within their crypto portfolios. On-chain data reveals increased institutional appetite for Litecoin, with whale addresses quietly but steadily accumulating Litecoin throughout 2025. Notably, investment firms and institutional wallets have significantly increased their Litecoin positions as well, reflecting a growing conviction in Litecoin's resilience and undervaluation relative to Bitcoin and Ethereum. With Litecoin ETFs also being explored and financial institutions increasingly incorporating Litecoin into regulated investment products, JRNY TV believes that Litecoin is realistically positioned to reclaim its previous all-time highs, potentially even breaking into the $400 to $600 range by 2025. Retail investors everywhere would be wise to recognize that institutions, they see Litecoin as an essential crypto hedge, and quietly positioning alongside them could yield tremendous long-term gains. Now that we've uncovered exactly which cryptocurrencies Wall Street giants and influential figures are quietly accumulating, the most critical question remains: how can you, the everyday investor, position yourself right now to benefit from the incoming institutional wave? The truth is, timing matters immensely. By the time institutional buying becomes mainstream news, prices will have already soared, and opportunities, they will diminish rapidly. That is precisely why staying ahead of institutional movements is so essential. Strategically aligning your portfolio with cryptocurrencies institutions are targeting, such as Bitcoin, Ethereum, XRP, Cardano, Solana, Litecoin, and even niche bets linked to narratives like AI, layer 2 scaling solutions, and real-world asset tokenization, is crucial, incredibly crucial. Instead of chasing random meme coins or short-lived hype cycles, focus your investments on cryptos backed by tangible fundamentals, clear regulatory acceptance, and growing institutional demand. Regularly tracking institutional activity, whale wallet movements, and ETF approvals, it gives you a distinct edge in understanding precisely where the smart money is flowing before the wider market catches on. Finally, do not ever underestimate the power of patience and conviction. Institutions rarely invest with short-term profits in mind. Rarely. Instead, they build positions with multi-year horizons, understanding that true wealth is made through long-term commitment rather than the fleeting market sentiment. Adopt a very similar approach. Diversify your investments, build your crypto positions gradually, and always stay informed. Here at JRNY TV, we firmly believe that aligning yourself early with institutional money is key to life-changing returns. So stay vigilant, stay ahead of that curve, and as always, do remember that the future belongs to those who start preparing for it today. Until next time, keep exploring, keep investing smartly, and stay ahead of that curve with JRNY TV. We will see you in the next one.